you wouldn't get caught slipping, so to speak. You had to buy clothes, be going to the gym, electronics, appliances, school fees, and we start to talk about children yet, and the costs that come with children as well. Then, if you're a religious person, then charitable giving might be a key part of your expenses. Some of us pay tithes, and that might be the first thing on our budget. Offerings, giving of alms, donations, and there is something we usually don't budget, but we need to start putting it into our budget from today. You see those fundraisers, the builder block and the raffle sheet, and that we don't budget at all. Budget at $60 here, $100 here, $200, $20, $40, that adds up. So we need to factor that into our budget on a monthly basis so that we can better track. And then, after all of those key things, now I know all of this saying, that money done already, because you want to think to talk about. Mine coming how much? And yes, I will get it. I hear you. But this is how we plan to actually better manage our money. Then comes the last aspect, leisure. The actual spending, liming. Some of us play mass, attend fetes. If I was to ask you, no, because I'm not hearing you all in live in time, it might be delayed, I wouldn't ask somebody to answer directly. But if I was to ask any one of you who played mass, how much it costs you? You're going to say somewhere between $4,000 and $10,000 to play mass. There's a rule when it comes towards how much you allocate towards leisure. And Natasha will talk more on that rule in a little bit. But if your spending on leisure is significantly more than it should be, then you are taking away from your actual priorities. And then we talk about, okay, we talk about light bill, about loans, about groceries, about children, about giving offerings and donations and charities. And then some of us have additional responsibilities. And I don't want to go too much into that, but additional responsibilities might talk about additional relationships, additional children outside of the marriage. These are realities we have to work with. And then what if you have dependents who might be sick, or dependents who might have legal problems, and you have to contribute toward the legal fee? You're not going to pay this month and your brother going to jail? You can't allow that to happen. So you need to budget for that as well. And after all of that, you know what you all asking? But Denzyl, what about savings? You see where it came? At the bottom, that's not where savings is supposed to be. But you have nothing left, and we know how to talk about savings. So let's look at the actual rule of thumb when it comes to budgeting to see how you should allocate your money.
So have you all heard about the budget formula, the 70-20-10 budget formula? So this formula, this is where your after-tax income is divided into three categories. So this 70% towards living expenses, 20% towards savings and debts, and 10% towards leisure and all the wonderful things that we find ourselves getting involved and caught up with. And that is where we tend to find ourselves falling into debt. But before we reach there, really and truly, we need to take a step back and look at how we apportion our money. Try to use your budget calculator. There is where we can apportion properly how you manage your funds.
Correct.
So let's talk first and foremost, why save? And there are three reasons why people should save.
Correct.
So let's establish an emergency fund. Some people save towards a goal, and you can even save to build collateral.
Now wait, Natasha. You're talking to NESC teachers and lecturers. And I know NESC to be more of a technical vocational school. I might be mistaken, but using terms like building collateral and emergency fund, what if I am not working in the credit union in Venti and I don't know what an emergency fund is? What is an emergency fund?
So let's hear from Candy, who would help us understand what is an emergency fund.
Rainy day. But how much do you need to have saved? If you were to lose your regular income because of an accident, injury, job loss, or some other unfortunate circumstance, if you were to lose your regular income because of don't just stop, the bills keep coming. Therefore, You should save at least 6 to 8 months of your income in a liquid account like venture credit unions, deposit and shares account. That way, you can still live the same quality of life until you recover or find another source of income. That way, we can help you create an emergency fund. Call us to set up an appointment or simply come in. Let's get you on the road to financial stability. Call us to set up an appointment. Let's get you on the road to financial
a goal. And finally, to build collateral. Now, building collateral is a technical term. So let's hear from an expert loans officer who will know exactly, or you weren't hearing? Okay, let's hear from an expert loans officer who will explain to us, after we know and understand building collateral, saving for an emergency fund, saving toward a goal, let's hear what exactly building collateral is about. A clip will play in a short bit that will give you a little more insight. But let me prelude that clip. When you come to take a loan, it's important, depending on the type of loan it is, that you have collateral saved up. When we say collateral, I don't want to get anybody confused. What we mean is your savings that can be used to supplement the payment. God forbid you weren't able to make the payment. So sometimes the bank or credit union or whichever financial institution you are most familiar and comfortable with will require you to have some funds saved up. Let's say you qualify for 90% financing for a home. So you want a mortgage and the credit union is willing to finance you because you qualify for 90%. You need to have that 10% saved. If you qualify for 80%, you need to have that 20% saved. That 20% is called your collateral. And that's a key reason why people will save, to build collateral. It's very important to start building collateral before you come for your first loan. That way, when you come to a loan, the bank has a history of you saving and shows you consistently being financially responsible. And they build a history and a relationship with you. Similar with the credit union. As we see you depositing toward building saving, building that collateral, it makes it easier for the loan officer to grant you that loan when the time comes. So that's the three key reasons why we save. One, we save for an emergency fund. Two, we save toward a goal. And three, we save to build collateral. Now we'll move into the next segment of today's discussion. And the next segment of today's discussion is really based on, after money management, we look at debt and managing debt. And when we talk about managing debt, we're looking at all aspects of debt, not just the one loan you have or the discretionary expenses. What is debt? Debt refers to any financial obligation that you might have, whether it be to another person, whether it be to a bank, whether it be to a company or any other institution. Any financial obligation you have is debt. So yes, your hire purchase that you went to court to take out for the chair or the couch or the bed or the fridge, that is debt. Any loan you have, that is debt. Your credit card also counts as debt as well. Kidding. Any of those that you have will count as debt as well. So when we talk about managing debt, we're talking about every element of debt. So let's go into it. Why do people borrow? The reason you borrow is because you may not have been able to afford what exactly you wanted to purchase. So you come to the credit union to get a line of credit or to borrow in order to afford these goods and services, whether it might be any purpose you borrow for. But if we see how we live and the things we purchase, we can begin solving the issue from the core to determine what influences our personal debt situation. The first aspect that causes us to end up in debt is poor planning. If we make poor spending decisions, we will most likely end up in debt. Let me start from the top. You know what shoppers regret? Natasha, if I went to buy something,
Yes.
and you see it, and you purchase it, and as you reach home, you're vexed by it.
Well, yes. And you see, impulsive spending causes that.
Correct. Emotional buying, whether it's led by advertising or an unwillingness to shop around, that is what really causes us to end up in shoppers' regret. Because we would have been the ones who would have not taken the time to make a better decision.
Correct.
And next reason people might end up in debt is because they got misled by bad advice.
Correct.
And sometimes it might be a financial institution giving you that advice, or a friend or a relative. The most common reason people end up in debt, Natasha.
Living beyond your means.
Living beyond your means.
You don't want to hang your hat where you can't reach it.
Correct. And that is a very common factor. Most people are living beyond the means. You will not believe how many Trinidadians and Tobagonians are living beyond their means. You want to know somebody who's living beyond their means? Anybody with more than one credit card and the first one is maxed out is living beyond your means. That person is living on instant gratification, whether it be trying to keep up with the Joneses or trying to have too much things that are outside of the pay bracket or affordable bracket. But that is a sign, an immediate red flag to say, yo, you're buying too much, you're spending too much, and you can't afford that. And as we mentioned, credit cards, we need to go a little more in depth with credit cards.
Correct. Because you see, credit cards are the most common factors which leads to that situation, right? Credit cards it's a payment card which allows cardholders to pay for the goods and services using a line of credit based on the holder's promise to pay. The credit card offers convenience, yes.
Yeah.
The credit card can be emergency life preservers, yes. They are, however, potentially dangerous tool if you don't know how to use them.
So understanding that these are the key factors that help cause people to end up in debt. If we look at how we manage these situations, we can come out of debt. And when we talk about managing situations, we're talking about managing expenses as well, right? The same list of expenses we had, because mismanaged expenses I mentioned earlier are any expense you leave unpaid for a certain amount of time and then start to incur interest. So before you end up in that situation, let's look at how we can come out of debt before these become a mismanaged situation where you're considering declaring bankruptcy and that kind of chaotic situation. How do we come out of debt? The first way to come out of debt, it's not the most common, but it is a solution. And that solution is via windfalls.
Yes.
Let's look at the clip and understand more about windfalls.
Imagine you're going through your everyday routine and a great unexpected event takes place, which brings joy to your heart. That is what windfall does. A windfall is a large amount of money coming into your possessions that you did not anticipate or expected in any way. It may be that you won the lottery. It could be that a long-lost relative or friend left a large inheritance in your name. It may even be a bonus payment from your workplace that you may not have been aware was coming to you. The real question is, what you do with the extra cash? Splurge on Christmas? Attend all the carnival fests? Take a trip? Quit your job and live off the money? The responsible thing to do is pay off all your loans first, then invest a portion of the balance so that you can continue earning income from that original payment. If you have excess income and you're looking for financial advice, visit our website, venturecreditunion.com, or follow Venture Credit Union on our social channels. Let us help you make the right choice.
Nice. So now we understand what a windfall is. If you get a windfall, your first priority should be to clear off all of your debt. If you get a windfall and somebody leave an inheritance or you win the lotto or whatever it might be, your first priority should be to clear off debt. The next way to clear off debt might be disciplined, structured payments. This literally means pay the loan as you agreed to pay it when you took it out in the first place. It's lengthy, but it works. And when you get salary increases, it's not to go and spend the money on consumable items. That extra income you should use first to clear off the extra debt faster. And then when you clear off your debt, it frees up all of the cash that was going towards paying loans now so that you can live a better quality of life. So remember, if you get a windfall, pay off your debt first. And next way, if you get a salary increase, that will help you to pay off your debt faster.
Correct. And using these extra income to invest may bring some sort of return faster to you. And with that additional return, that can be used to help you clear some of your debts faster. Another way that you can get out of debt is gambling.
Now, gambling is never advisable. Some people, you're owing somebody already, and then you take the money you have to go and gamble it. And as you're gambling the money, you lose the money, and then you have nothing to pay the person, and you have nothing for yourself. Gambling is a means that a lot of people think might work in their favor this time, and that's how they plan to pay the debt. But gambling is never advisable. And that's a serious, serious thing, right? A lot of people get caught up in gambling, but that's not the best option. Our next option people take.
Correct. And before we go there, some people, go on the notion at gambling with the intention of winning the lotto.
Yeah,
right?
Yeah. You can't wait forever until you win the lotto to pay off your debt. There's a 1 in 39 million chance that you will win the lotto in Trinidad and Tobago. Our lottery system is 1 in 39 million. Just think of the probability. That is not your way out of debt. If you happen to win it because you have been taking your chances in the past, then by all means clear off your debt. But that can be your number one solution. Some people tend to
borrow from a relative or a friend.
Yeah.
That may work, but it might affect your relationship with that person.
Correct.
Right? Another way that you may look at clearing off your debts would be selling off of some of your assets, but then that will decrease your wealth.
Correct.
Okay? So then we also resort to another means, which is debt consolidation.
And debt consolidation is a realistic, time-tested, proven way to come out of debt. It is not an immediate response, but it is a practical means. So keep your focus on the screen and let's see this clip that helps explain what debt consolidation is.
So I'm responsible for planning the dinner for the entire family and things are not going well. Auntie was supposed to do vegetables and she just called last night because she preferred to do salad. Another relative canceled on the main dish, so I have to find someone else to cover that too. Now I really stress, I really hustle because I haven't even found time to do my own contribution. And who is even responsible for bringing the drinks, napkin, plates and cups? Wouldn't it be much easier if we had hired a caterer? And I don't need to stress about who bringing what and who changed their mind and just focus on paying that one person. That's how debt consolidation works. Combining all your debts, credit card, car loan, mortgage, hire purchase, vacation loan, into a single new loan that is more favorable. This new loan pays off all your other debts and you just focus on the single lower interest rate, reduced monthly installment to ease the hassle. So why not consider consolidating all your debts with us? Adventure. Ease your financial burdens and accomplish your goals.
So you only owe one institution. It's very useful to help overcome your multiple debts. And when you're doing that consolidation, try to renegotiate the credit terms. That's an option you can take. And if the institution that you are trying to renegotiate with is giving trouble, come and call us at Ventia and let us consolidate your other debts, clear off all those loans, and you'll only owe Ventia at one lower interest rate, lower installment, and we can help you get out of debt. But until we get out of debt, your credit worthiness continues to be affected. And if you want to know what factors affect your credit score, or how much you will qualify for, or how you can clear off your debt, Bench's number is 2254 VCU, that's 2254828, and ask for any loans officer, and we are ready. Had to put that plug in there, right? Mm-hmm. So, as we spoke about money management, we spoke about debt. Now let's go into a lighter, more interesting topic. Let's talk investments. If you are all the teachers and lecturers at NESC, then this is a conversation that you and I could have. What is a good investment? And before you answer, I know what you're going to say. Stocks and shares, owning your own business. You want to know what a good investment is. Should I go and buy unit trust mutual funds? What about crypto? What about NFTs? Just the other day, a guy asked me, Denzyl, you just manage investments? Yes, I said, yes, I manage an investment portfolio. Okay. So here now, the credit union doesn't invest in Trinidad artists. We always sponsor Trinidad artists and get returns from them. What about Forex? What about the NIF investment that went daily? Or what about owning an apartment and getting rental income? Or is a good investment, let me take my money and put 2 teeth on the road. What is a good investment for me? To answer this question, this is not a generic answer across the board for everybody. Absolutely not. Forget that. Everybody has to build out your own individual investor profile. So the next time you see an investment expert, don't be too quick to ask what's a good investment. Takes time, because I need to know how much money you think you can invest. Is this a one-off payment, or are you going to make consistent contributions every month or every quarter? How soon you need your money back? Do you have coverage in case something was to happen? Because it don't make sense I take an investment where you have to be contributing $500 every month, and then God forbid something happens to your dependent, and whatever happens to your dependent, you need to take that same $500 and pay towards that because you didn't have coverage, whether it's pension or insurance or annuity, or you need to have coverage first. Make sure you're protected and then take the extra income and put towards investment. What type of returns are you comfortable with? Are you okay with high risk? Are you okay with low risk? Are you okay with risking losing your money? Then we could talk about stocks and shares. But if you want your principal guaranteed, then you're looking for lower risk investments. And how long could you stay without the principal you put out? How long can you wait before the money comes back to you? How much sources of income do you have? And how many dependents do you have? Do your dependents have coverage as well? I can't tell you, hey, put $500 in this fund, and yeah, you're paying $500 every single month, and then your child gets sick, and the $500 goes to that, and then the whole fund lapses, and then what happens next? Now you have nothing left. So I'm not giving you plenty of information and ideas, but that's a one-to-one conversation, and we are ready to have a conversation with you. But it will differ for everybody because not everybody's at the same place. If you want to talk investments, let's talk passive income. Something like royalties or rental income, where you make the investment up front and you earn the returns over time without having to put in effort yourself. Real estate returns, tax-free investments. There are more risky investments like stocks and shares. There are investment funds. You could go with the safer investments like the NIF that just passed, government bonds, corporate bonds, credit union shares. Have to make that plug there. Unit trust mutual funds, strictly the fixed NAV funds are less risky. The floating NAV funds are more risk, but of course a floating NAV allows you more returns if you hit on your score. What about high risk like crypto and Forex and commodities? If you can't handle the volatility, I strongly advise you stay away from these investments. And of course, I mentioned some of the low risk like the unit trust mutual funds and the credit union shares. Those are all different types of investments that you can consider. So again, before we go on to the next section, before the guys scroll up into the next section, I will recommend that you sit and ask yourself these questions and let's have that discussion so we know whether or not you are ready to make that investment and what will be the best investment for you. Now, it's different for everybody, but when you're ready to have the investment stock, 2254828, and ask for anybody in investments. And we are ready to have a discussion with you. And before we come up for investments, I want to make one plug. The more you invest in yourself or your business, the better the returns. So there is no investment out there that can give you returns like your own business if you have your own business. Because the more effort you put into it, is the more you can get out of it. So if you already have a business, before you look to buy shares and to do this and to invest in something else for a 4% or a 5% annual return, or a 2% annual return, consider reinvesting those funds in your own business, expand your business, and earn even greater income in the period of time. And we'll go into the last segment, retirement planning.
Yes.
No, I'm not saying all you're old and ready to retire now, but the reality is retirement planning is not for the elderly. Retirement planning is for the young, because we can't wait too late to start to plan for retirement. Let me give you a fact. In 2010, 67% of all Trinbagonians who retired did not plan for their retirement. 67% of all Trinbagonians did not plan for retirement. What does that mean? What is my retirement going to look like? That's what we have to ask ourselves. What do I want to do when I retire? Most of us never thought of that. And the most we may have thought of might fall in one of these categories.
Yes. So what do you want to do when you retire? Would you like to travel? Would you like to see the world?
Some people might think retirement is when they go and travel. But if you're going to travel when you get older, sorry. The people in the room here watching me when I say old. If you're thinking of traveling when you get older, remember at that age, you're more tired more often, you don't have the energy, and then you have more responsibilities, your family, your grandchildren, you're going to miss, you want to come back home soon, the jet lag taking 2 days to wear off as compared to when you're younger and you're ready to go next morning. There are many factors to factor in, so don't wait to plan for your retirement when you retire. And next option, some people think retirement is living in a retirement home. Some people think retirement is picking up a light leisurely activity with people your same age.
For example, like golf, right?
Yeah. I have friends who I know, as soon as they retire, they start to play golf. Some people think retirement is renovating your home and spending more time with your family. But remember, you retired, your family didn't. So that don't mean they have the time like you have the time. So don't wait until you retire and feel that's when you're going to spend time with your family and fix up the house and invite everybody over and get the grandkids to come and live with you. Your grandchild now finishing school and ready to go about their life. So keep that in mind when you're planning for retirement. Some people think retirement is, there's a saying, 2 at 25 better than 1 at 50. We marry somebody half your age and find a new energy. But that might not necessarily work for everybody in every circumstance. And that might be a costly plan for retirement. So I strongly advise that you not consider that as your retirement plan. And some people will say, no, I have a business plan for when I retire.
Exactly. So you might want to go into real estate, property rental. You might want to, as he said, purchase 2 T-Dubs or some other type vehicle and work taxi. Yeah. Meet new people. You want to become the taxi driver of the village. You want to, connect with people. You have a lot to talk about. You want to give advice to your passengers and that kind of thing. And that is how you see your retirement. Yeah. Some people do that. Some people think retirement is sitting back in a rocking chair all day and, just reminiscing about the wonderful memories that you may have. Sipping on some nice coffee, something to that extent.
And these are all nice plans, eh? But the question is, did you plan for your retirement? Or you think you're going to work all your life? You feel you're going to earn an income all your life from the company you're working for and you just figure it out? Mm-hmm. Or are you going to be that person, those persons, they retire and then 3 months later they come in the office. Nah, just come to fix a pension plan, it's about a pension. Then 2 weeks later they come back again. Oh, nah, just come to check so. And then a week later you're seeing them. And now you're seeing them more often than your own co-workers because they're still in the building. That is not retirement. That person clearly did not plan for retirement because they're still working every day, although they retired. What is your retirement going to look like? The key factor in planning for retirement is what are your income sources at that time and what will be the needs, your financial needs at that time. Will the money I retire with afford me being able to do the things I plan for during my retirement? And that is what determines how well prepared you are for retirement. Do I spend my entire pension in the lottery until I win big? Yeah. Every day you play and lotto. Every week you watching the numbers to see if it's going on call. But that might not necessarily work for everybody again. You need to start from now. From the time you start your first job, correct, whether it's an annuity or whether it's putting money in the credit union or whether it's whatever it might be, putting money away for your retirement, you will be shocked at the statistics, and I'll share these stats with you in a little bit, right? But first, let's look at what your needs going to be when you retire. What will I need money for when I retire? That's how you better plan for your retirement.
So when you retire, there are certain things that will never go away. You need food to survive. Some of us may need clothing to survive. You have your household amenities. The bills just keep piling up
Your
ever
bills
so
never
often.
stop.
You know, you might tend to pay more in these sorts of bills.
Yeah.
Then remember, you are also advancing in age, so your medical bills definitely will increase.
Correct.
So you have to take these things into consideration.
Correct.
You may have children going to university.
Correct.
So you need to cater for those things, cater for the children's university cost.
Correct. And mind you, we inside the mention the things you talk about just now, right? The traveling and the investing in the business, all these things that we're able to afford. Is your pension plan able to afford that? Now, I ain't trying to get NESC all reeled up and HR watching and saying, I'm to Denzyl, boy. He ain't know what's going on with me across here. He ain't want me asking them kind of questions. No, but it's important to know. Ask your HR manager, HR officer, how much am I going to retire with based on my contributions today? Because too many people think that, no, well, old age pension, what is $3,500 a month going to do for you? How are you going to travel and see the world on $3,500 a month or $4,000 a month? If you're being realistic. Okay, you're young now. It might be $6,000 a month then, but do you know what the cost of living might be then? Let me tell you some statistics. Trinidad has a positive rate of natural increase, meaning despite all the murders and the accidents and injuries and incidents, we still have more births than deaths. Look at this, right? Life expectancy is still going up, but only 67% of the population, but only 33% of the population, 1/3, have a steady income after retirement. You know what that means? 67% of the people in Trinidad and Tobago depending on NIS and old age pension to live after the age of 60. I'll repeat that. 2/3 of Trinidad and Tobago's retirees are dependent on NIS and old age pension. Is there going to be an NIS by the time you and I are ready to retire? Imagine so much people depend on the government system. And how much could that do for you? How are you going to travel and see the world? How are you going to renovate a house at that point? More than 50% of the working age population still don't have any form of a pension plan besides your work plan. You need to know how much you're going to retire with from your work plan and see if you need to put some of your salary and allocate it toward another annuity or another pension plan, whether it's an insurance company or some people like some persons might even decide, you know what, I'll put my money in the credit union and every time they pay dividends, I'll reinvest the dividends in shares. So when I retire, I have that lump sum payment that I saved over the years. And that is their separate retirement plan because you can't depend on the work pension plan for all your life.
Yes. So the fact is, the credit union has products and services which caters for all persons and all walks of life.
Yeah.
The affluent, the less wealthy.
Everybody.
Everybody, right? So we just don't pitch a sale or force a loan at you. As a credit union, our main purpose for operating is to educate you, the member, so that you are more aware and better off financially after every transaction.
Yeah.
That's why we are here, to help you, the member, better manage your finances. So if you have any questions, we are here. We're going to remain online for a couple more minutes. If you choose to stay, we'll try to answer your questions and so on. And feel free to check out our website, www.venturecreditunion.com, or feel free to call us at 225-4828 and speak with any one of our officers. We would be more than happy to help you.
And just for the sake of it, if you're on social media, check out Venture Credit Union on all our social handles, on all pages. We're on LinkedIn, we're on Facebook. I had to put this plug, right? We have a YouTube page and all. We're on Instagram. Go on the social media and you can feel free to comment about today's session. And if you want to talk about any aspect in more detail, we are here. And your HR who coordinated this session has all our contacts. So we're ready. And I think we're going to be going to some of the schools thereafter. So we are more than ready to come and answer any of your questions. And we thank you very much for your time today. And I hope that it was profitable. If you have any questions, we are here. Feel free to post some of your questions. I might not hear you, but put it in the chat or ask it, and we will try to get it across from the team here so we can answer them one time. Yes. Any questions?
Thank you.
what are the interest rates at Ventia? So somebody asked what the interest rates are. You might need to specify when you ask what the interest rates are. We're talking about loan interest rates if you want to borrow, or are we talking about interest rates on shares, deposits, investments? If you're talking about the both, then you can get some of the most competitive rates at Ventia. I don't want to go in detail because it's recording live. And then somebody else from our next financial institution or who's closely aligned will know more rates. And then you can see how that institution could become more competitive. But I can tell you the same car loan rate, the best one you can get in the city or in the country, we can match it. And we have some of the most competitive vehicle rates. We've given vehicle loans as low as 4 and 4.5% for vehicle loans. We've done mortgages for 4. We are still doing mortgages for 4.5%, which is unheard of, as you very well know.
Yes.
We have a lot of
different type of loans, different rates. Yes.
Medical loans, investment loans, back pay loan,
festival loans.
Yes, festival loans for Christmas.
You may want to spruce up your home. Feel free.
Carnival, home renovation, 1% on the reducing balance. If it's investments, we do have fixed deposits, different types of fixed deposits at different rates. And the dividends are, if you have shares in the credit union, you earn dividends, but the dividends are discretionary and they are declared every year at the AGM. So if you are not yet a member, join and become a member. And if you are a member, I hope to see you at the AGM and you will see what the dividend for this year will be in the AGM, which will be in April of this year. So stay followed on social media. If you have any more questions, feel free to ask.
Ayana asked, do you have to know someone to join Venture?
No.
Do you have to know someone? Well, Venture allows you, Ayana, to join the credit union even though nobody has to vouch for you. Because we are open to all citizens of Trinidad and Tobago. So yeah, you don't need to know anybody. You could just come and sign up. Call us in advance so you can make an appointment so you don't have to wait in the line. Now, if you come on your own and it's not in the long line, I didn't send you. But if it is, you want to come, call us, we'll make an appointment for you. So you skip the line and you can come and sign up to become a member.
And our requirements are very simple, and it is there on our website for you. But just to tell you quickly, 2 forms of valid picture ID. If you don't have the 2 forms of valid picture ID, we can accept 1 form being your birth certificate. We need to get your proof of address, a job letter, and a recent payslip. It's simple as that.
You must be a member to get a loan?
Yes, you need to be a member in order to obtain a loan from Venture Credit Union.
But there isn't much of a waiting time. If it is you are applying for a loan, you can join, and as soon as your membership is approved, you can come and apply for loans one time. And our membership approval process is not very long at all, a handful of days.
You mentioned high-risk investments. Can you elaborate on this in particular?
High-risk investments, I'll elaborate a little bit, no problem. High-risk investments refer to investments where your principal could decrease or increase. Now, Finance 101, greater the risk, greater the reward. So if your risk is bigger, you could lose. But if you gain, you could gain more. So things like commodities, like stocks, because it's based on market sentiment, you could buy a stock at $100 today, and tomorrow the price could be $85. If you go to withdraw that or sell your stocks, you'll only get $85 for it. So you could have lost, but that stock will go up to $140. So it's volatile and it fluctuates. Cryptocurrency is extremely volatile. It goes up and it goes down rapidly. Foreign exchange is also extremely volatile. So if you're not ready for that level of risk where you could lose your money in that short term, then I will not recommend you go for high-risk investments. But greater the risk, greater the reward.
This is a statement. 2 years ago, when for a loan in 2 credit unions, however, the bank total interest for the total loan was less.
I beg pardon?
It's 2 years ago, when for a loan in 2 credit unions,
Yeah.
however, the bank interest for the total loan was less.
Yeah, so different institutions, I heard that question about going for a loan in 2 different institutions, and then you went to the bank, and the bank gave you a consolidated loan, which covered the 2, and it was less. Now, different institutions run different specials at different times. So chances are, I might look to go for something now, and the rate I will get here might be 1, but then I go somewhere else, and I might catch a better rate because of the specials they are running. So sometimes it's in timing. But if you are getting a loan somewhere else, and you inform your loan officer in your credit union, then most likely they will find the best product. So it's not just about lending you money, right? It's about finding what is the best product for you. Because you might think you want this, and you haven't looked at the other needs you have. And that loan officer is ready to show you what your real needs are and find the best product for you.
Continuing from the investment, because
Plenty investment questions today.
Venture
Venture has shares, so you can buy shares in the credit union. Every member must have at least one share. So you can buy shares in the credit union, and we have fixed deposits. We also have fixed deposits as well. Now, Venture doesn't sell investments like a brokerage or investment house. That's not the nature of credit union business. But we do have shares and fixed deposits which give you safe returns, because your returns, I don't want to say guaranteed because that word has a stigma behind it. Guaranteed investments. It's not guaranteed investments, but you do get dividends on your shares and you do get interest on your deposits. So we offer those as investments.
How long do you need to be employed at your management to be a member?
No, we don't have any restriction in terms of your employment, right? So you can feel free to join the credit union. We do have self-employed persons are members of our credit union as well. So there is no restriction per se, but if you want to apply for a loan, we will also consider where you were employed before. We will take these things into consideration and do your assessment, because every member, their assessment may be a little bit different.
Again, as it relates to high-risk investments, is there a minimum of amount that you must invest? As well, do you have to be a member? It's the same person asking.
Yeah, the person asking about high-risk investments. Different investments have different characteristics behind them. So some investments you must give $1,000 minimum, some or a multiple thereof. Some investments as little as $20. Some investments there's no limit; it could be any figure. So that's a technical question based on the type of investment you're talking about. So every investment is different. Every investment fund with every different institution is different, whether it's a brokerage or a mutual fund company like the unit trust, or whether it's an investment house or a credit union. The different types of investments have different characteristics. So if you're talking about venture in particular, venture doesn't have high-risk investments. We don't, because our main purpose is to preserve your capital. When you put your money with us, at no point should it be said that your money was lost or you couldn't get back your money. So we tend to go for more safer investments. We are more of a moderately conservative investor. So we will not put it in anything that is too risky that you can't get back your money. But if you're looking for that high risk, because looking for that high return, then go Las Vegas and gamble. I'm kidding. Don't go Las Vegas and gamble. But if you're looking for that high risk and that high return and you're ready to take on that level of risk, what I will advise you is get all the information. Don't invest in what you don't understand, because you might go into it thinking it's a good investment because of what you hear people say they got, and you might see the lifestyle they portray, but it doesn't mean that you are guaranteed that kind of return. And then by the time you invest, I don't want to call any names, but you remember I need two people. We all remember that investment 3 years ago, 4 years ago during COVID, and how many people did not get back your money, how much two people who flower didn't blossom and that kind of thing back then, and who, you remember that investment back in the day, the modern day susu. I wouldn't advise you go into it unless you understand how it works, so you know the risk you're getting into. And if there aren't any more questions, I will leave one last tidbit for you. When you are thinking of borrowing, I strongly advise that you look around before you go to borrow. A lot of people rush to borrow with the banks, and there's nothing against borrowing with the bank, but you might be surprised that the credit union might give you the same rate and even more, because credit unions will go even further than the banks go. Credit union you might not even have much collateral, and we are willing to help you. The whole purpose of a credit union is to educate you so that at the end of your transaction, you are better off financially. So we might build into your loan a saving plan. So by the time you pay off your loan, you still have a saving that you would have contributed toward every month in your loan payment. So you have something to fall back on. That is what credit unions do for you. So before you rush to go to that lending institution with the hassle-free loan, I wouldn't recommend you go for that high interest rate in loan at that institution or those institutions. And I'm not saying don't go by the bank and only come by Venture. I'm not doing that. I'm not here just to pitch Venture. I'm here to tell you, look around and consider it. And feel free to reach out to Venture, and we will show you the products that we have, whether it's loans, investments, deposits, so that you can understand how to make the best financial decisions for your better financial future. So if there are no more questions, we at Venture Credit Union would like to thank you very much for the opportunity. And I hope it was productive. I hope it was fruitful. I hope you ain't fed up hearing my voice because I talk so much. Natasha and I talking so much all evening. I know somebody's saying, but Denzyl, you talk more, Natasha. We didn't hear from you yet. But I really, really thank you very much for your attention and your time and for the opportunity. And I hope that something we said today will resonate with you. And more questions. Oh, let's stick in, man. Should I bring this earlier? No problem. Thank you very much for the feedback, Natasha Millington.
Yes.
Greatly appreciated.
Yes.
And if you need more information or you need a follow-up session, we are here.
Yes.
So just tell the HR, hail us, and we're ready. But we are supposed to be scheduled to come to do this with the students as well, because some of your students might need to know this kind of knowledge as well. So we are scheduled, we are ready, and just reach out to us. And once again, thank you very, very much.
And I just want to say thank you for this opportunity, and I look forward to hearing from many of you, if not all of you, and I look forward to actually meeting and connecting with you in person in the near future. So thank you once again.
Done?
Your dreams come to life. All we need is community. Together it's you and me. Let's venture and make your dreams come to life. We are here for your every need. Help you financially. We are a family, so come inside. Venture Credit Union is the place you should go when you in need of a loan. Venture Credit Union is the place you should be for financial stability. Let's venture together. Let's venture together. Let's venture together. Venture Credit Union. We offer all types of loans, vehicle loans, mortgages, debt consolidation, education, medical expenses, and home repairs. Why just dream when you can venture?